Hi there, welcome to Kneppy Invest and welcome to June 18, 2024. I did not realize June can be so boring when it comes to the stock market, well, to the ASX at least. And this is another one of those fairly dull days. However, there were a few interesting announcements, just a few. A few small cap companies released okay announcements that had me a little bit intrigued, and I suppose that's enough. But overall, a pretty good day on the markets, apart from materials again. Resources flat, but the ASX 200 up 0.91%, or 0.81%. Small caps 0.53%, and tech 0.47%. So I have a feeling it's mostly those boring big cap companies that aren't going to grow at all over the next 10 years that have done the heavy lifting today, including the banks. And I did notice that CBA has a PE ratio of 23. Why would you be buying any banks with a PE ratio of 23? It's absolutely absurd to me, but for some reason, mostly retail investors are loving the banks right now. So the agenda for today's video is I'll go through the ASX today. I have a look at one tweet, have maybe answer a few questions, and also top 5 announcements of the day, and a few honorable mentions, and maybe I'll have a look at a chart or two. So first thing I'm going to do is have a look at a really interesting tweet. This is actually quite interesting because it's looking. This is from the ATO, or the Australian Taxation Office, having a look at the proportion of taxpayers with an investment property by occupation. So on the bottom, we have the average total income, and on the side, or the what do you call that, the vertical scale, we have the share with investment property. And there's a pretty nice fit there, all the way up: surgeon, internal medicine, specialist, mining, engineering. So, of course, the more income you have, the more wealth is tied up to property as a percentage, except for financial dealers. And the funny thing is, so whoever set this tweet out says, why is that? And someone answered it perfectly. Bow Tied Stock says, which one do you think generates better returns? That's it. That's it in a nice little bow tie, hence bow tied stocks. And there was actually a really good reply to that comment. Sounds sensible. The first one. Seeing some of our wealthier clients do 10x in the last 5 years on high growth stock market, but then diversifying back into real estate. Stock market for wealth creation, real estate for wealth preservation. I actually do agree with that. And in fact, I was working the other day in the office, and someone just mentioned the lottery, and I just asked the question, would anyone come into the office if they won the lottery? Someone actually said, oh, yeah, I'll come into the office. Sure, they would. So this was like $140 million. And then someone else mentioned that buy heaps of property. And I probably would do almost the same. I'd buy a lot of property. And one of the reasons behind that is just wealth preservation. But I would still be investing a lot in the stock market. So I think that's a really good indication. This is a really good graph, just showing you those people who are in the know are more likely to invest in the stock market over real estate, but more likely than not, other people will invest in property over real estate, over the stock market. And one of the reasons behind that is because they believe the stock market is risky. I've been told this a lot. I've been told, I have a friend who lost all his money in the stock market, and my reply was, well, that person has absolutely no idea what they're doing. And that is a problem when it comes to people investing in the stock market. They put all their money into the one speculative mining stock, and that mining stock goes to zero. And they think that the stock market is a gamble. And people hear other people doing that, and they think the stock market is a gamble. If you know what you're doing, it's the best wealth creation asset out there, asset class out there. Anyway, that's just my opinion. Nice little tweak there. Otherwise, I'm going to get to one of the comments later in the video, because it does tie into one of my announcements of the day. So let's have a look at the ASX today. No, that's not that one. In fact, before we have a look at the ASX today, what I'm going to do is I'll go through some of the purchases I've made over the past few days. And the reason I'm going to talk about that is because Bravura. I have bought back into Bravura as a trade. And I have traded this company now 3 times in the past year. So first time was back in July when the share price was 52 cents. Then I sold it at 71 cents, hoping the share price would pull back. It didn't pull back, went sideways, which is a good sign. Then I bought back in at 80 cents. Yes, I bought in a higher price than what I sold out. Then the share price went up 50%. Sold back or sold out of that position at $1.25 when the share price looked like it was becoming a little bit weak. And it fell all the way down to $1. I was a little bit surprised how weak the share price has been in this company. And I just thought $1 is a really important level for this company. Not only is $1 a natural support or resistance level because it's a round number. So after 10 cents, then you get to $1, and that's a significant level. But look what price it struggled to get above back in February of this year, before that really important announcement, the half year results, where we saw the share price of Reviewer increase. What did they increase by? 29.69%. Share price struggled to get above $1. So $1 is a very natural, important level for this company. I saw it struggling to go any further below $1 the last few trading days. So yesterday, I bought in at 99.5 cents, and today the share price has gone up 6.5%. So my thinking is maybe a bounce between 10 and 20%, and then I'll take my profits in this particular trade. I'm a little bit surprised the share price has fallen all the way back to $1 because those half-year results were pretty good, better than expected, and the share price has fallen back below to where the share price was before those results. So the market might be expecting maybe a profit downgrade or something negative from the company. The company hasn't released any news that I know of recently. I'm just going to have a quick look on Deterra. I bought some shares in Deterra, and I can't remember if the company's released any negative, not negative, any news since the half-year result. No, they haven't. No news. So yeah, who knows? A couple of other purchases. Yeah, Deterra royalties. I have taken a position in this. I was wanting to get a position at $4, but I've taken a position at $4.09. So this company has made an acquisition, and I'm a little bit wary about this acquisition because this is the sort of thing that could destroy this particular company. I don't think it will destroy the company, but it could. The reason I've taken a position in this company will become clear when we look at the weekly chart. So this company has been listed since 2020, and whenever the share price falls below $4, I think is a good sort of a zone to buy. Share price has been as low as $3.70 in 2021, has been as high as about $5.50 not that long ago, only a few months ago, or maybe 6 months ago. And I do think there is potential we might see the share price rally. A nice dividend yield, about 8% dividend yield, 7.65% dividend yield. So I think this is a nice little income play for me with some capital gain potential as well. So I'd love to see a 30 to 40% capital gain plus the dividend in the next year. That's the sort of trade I will always be willing to take. And even if that trade doesn't come off, share price doesn't move all that much, I would always take a nice little 8% dividend yield for a low risk play. This, in my opinion, is a low risk play, except the acquisition. And the other purchase I made is a company I've been following for a long time, and that is Paragon Health. I think it's called Paragon Health. Paragon Care, sorry. So this company made, or sort of doing a reverse merger. Not reverse merger, that's the wrong word. A reverse takeover with this other company. This other company is probably much better quality company than Paragon Care, and the market likes it. So I've been following this company ever since they announced it on the 5th of March. So we're talking about 3 months ago. And really that little pullback in the share price just after that was the time to buy. And I've just been following it ever since. And I've just taken a position in this company. What I've done is a small position. If I do see the share price pull back to between about 36 and 38 cents, I'll actually add to my position because I do think the share price can continue to rally from here. Chart looks pretty good with Paragon. Yeah, so 3 trades I made in the past 2 days. I have not sold any companies. There is one company I'm still following fairly closely, and that is DXN. And we have seen a real rapid shift in sentiment in this company. And I think it's just J traders. So today, we haven't seen much volume, only 202,000. So the volume has really dried up. That's what I want to see. So the last 4 days, we have seen a volume above 1 million shares. 2 days, almost 2 million shares. And today down to 200,000. And what we've seen today is just a little bit of, I wouldn't say panic selling, but people who just want to can't handle it anymore. They need to get out, and they're just hitting selling at market. That's what we've seen today. Share price was around 6.6 cents, and someone just couldn't take it anymore, and they sold 13,333 shares at 5.8 cents. And after that, we saw a few people just said, "Oh, I can't take this anymore. I want to sell lower." 5.7 and 5.6 cents, and not much bids above my bid. This is my bid at 4.1 cents. Now, whether that gets hit, I have no idea. It's not a very big bid, but if I do see the share price get towards that, I could consider taking a nice little sneaky bid at a little bit of higher price than that. And if you do look at the chart for this company, we've seen it perfectly play out. The nice little run in the share price, really good volume coming in, and a really good pullback. I would have probably preferred to see probably lower volume in the last few days, but today, the small volume today is a good sign. The selling is drying up. Those who probably wanted to sell are selling out. And I think more than likely, there's a good chance over the next few days, the selling will completely dry up, and hopefully the share price will go on another little tear. Hopefully, that's the plan moving forward. But again, hope is not investing strategy. But just a really good volume coming in is a good sign for this company moving forward. Plus, they're associated with data centers. Yes, data centers. That's sort of the in sector right now. So those are some of the companies I'm following right now. Some of the companies I bought, some of the companies I'm following. Well, only one company. I'm following more companies than that. In fact, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 companies I'm following right now, just looking for a potential trade or not. Okay, so let's have a look at the ASX today. And we'll go with the best performing sectors and indices. Utilities up, so defensive up. In fact, a couple of defensive plays there. Utilities, financials, a little bit defensive there. Staples defensive. In fact, every single sector is up. Although about materials and energy down a bit. So hopefully not heavily invested in mining companies. And for that person who keeps sending me messages and not messages, comments on some of my posts, I'm not heavily invested in mining. I have one mining company I'm trading right now. This person keeps writing about 3 or 4 messages saying, "You have too many mining companies. You'd be performing much better if you weren't trading mining companies." I'm trading one mining company right now. Anyway, just one. I wouldn't call Deterra a mining company. It's a royalty company, not a mining company. Anyway, so we've had a good day. Gold's a negative though. So let's have a look at the ASX 20, and I'm going to try to think if any company is going to be negative. So energy materials flat or just up a little bit. Everything else is up big. I'm going to say real estate, not that much. So what's a utility? Financials. I'm going to say banks have done really well today. So in the top 5, we're going to have 2 or 3 banks. What's a utility? Maybe now Origin would be. Is Origin even in the ASX 20? Can't remember. I don't think it is. And the worst performing company, I'm going to say there's 2 companies down, 18 up, and 2 of the companies down are going to be either energy or mining companies. So maybe BHP, Rio Tinto, Fortescue. I'm not even sure what Iron Ore has done, or maybe Woodside Santos. So let's have a look at the ASX 20. I have no idea which company is going to be the best performing. I'm going to say a few banks in the top 5. Okay, so 2 down, 18 up. And the only 2 companies down are Fortescue, down 5.27%. What's happening with Fortescue? What's going on there? So if anyone knows what's happening with Fortescue today, have they gone ex-dividend, maybe? No, nowhere near ex-dividend. Chart for Fortescue. Not really following Fortescue all that much. Chart looks absolutely ugly right now for Fortescue. What's BHP's chart looking like? Nowhere near as bad as that. No, I'm not sure what's happening with Fortescue, but people don't like Fortescue right now, and the share price is in a bit of a funk. And Woodside's the other one company down. So sort of got that right. Mining company, Woodside. And the best performing companies, Macquarie Group, Bank, Aristocrat, National Australia Bank, Bank, CSL, Transurban. Transurban, what would that be defined as? It's infrastructure. Is that considered utility? Industrials. Ah, there we go. Industrials. Yeah. Try to think of a utility company. Telstra would be telecommunications services. Yep. No, I can't think of one in here. In fact, let's go to. I wonder if in the utilities. Let's have a look. If you click on the utilities, there we go. Biggest utility companies, Origin, which I was thinking of, APA Group. Wasn't sure if Origin would be energy or utilities, but it's utilities and AGL. Yeah, okay. And I actually own one company in here, LGI. There you go. Okay, so let's have a look at the best performing companies and the worst performing companies. Let's have the top gainers. So I do have a top 5 announcements of the day, and hoping a few of these companies are in this list. And as I look at this top list of companies by percentage change, none of the companies, although I did see one there, Tinybeans is there, up 19.4%. That company has come in at number 4, a small company, markup of 10.6 million. However, they have done a deal. I'd like to see Biome is in this list. I should look at the chart for Biome. Up, what is that? 17.6%. So I'll have a look at the chart for Biome. That could be looking interesting. And we have Cardiex, up 15.5%. Another small company, markup 19.7 million. Cardiex has come in at number 3, a company I know nothing about. I couldn't even tell you what they do, but they have released an announcement today. And I can't remember what the announcement was, but the share price has rallied. And let's have a look by market cap. WA1 Resources has bounced. That's good to see. There's Reviewer. So it's had a good day today. Email payment. Race Oncology up 12.6%. And Race Oncology has come in at number 1. It's my number 1, my top announcement of the day. Capital Health is in there. There is a merger. And that was my top announcement of yesterday. But that has had another good day. Electro-Optic Systems is here as well. So a few interesting companies in the best performing companies by markup. And let's have a look at the worst performing companies. I'm not sure if any company will be in this list. Most of the top announcements, if not all the top announcements, are positive. Okay, so that's interesting. So Melbana down 31.8% on pretty big turnover. So this could be an announcement I've completely missed. Let's have a look. Yes. So May, this is an announcement I completely missed. And one of the reasons I might have missed it is because the announcement was released yesterday afternoon after trading had finished. Block 9, Alameda 3 appraisal update. Obviously, negative. Don't even have to open it up to know it's negative. So let's have a look at the chart for May. I would assume that the chart looked pretty negative before this announcement. Ooh, not quite. It had started to look positive, but then we saw a little bit of a pullback. 4 down days out of 5 leading up to this announcement. The share price has gone up a little bit today. So share price has been as low as 3.6 cents. But yeah, not a good looking chart, to be honest with you. So that's Melbana, the worst performing company on the ASX today by percentage change. Announcement I missed. And the reason I knew I missed it is because the turnover is pretty big. And look at the other 2 worst performing companies. Regenerate, change your name please, and Native Mineral Resources, both down big on very low turnover. Any other companies of interest here? No. LBT Innovations. Yeah, that was, yeah. Actually, go back to percentage change. Yeah, Melbana has a market cap of 152 million. So it's not a small company. Yeah, I don't consider that small. Some people like Rudy would say, oh, that's a really tiny company. I don't consider that tiny. Okay, Southern Cross, down big. Tinybeans, down. What else? Which is okay. I'm trading that right now. Anything else here? Nothing of interest at all. Bluebat down. Nothing else of major interests. Kina Securities down 7.37%. That chart actually did look sort of interesting last time I looked. Did they go dividend, next dividend? No. Any announcements? Oh, there we go. Customer fraud incident. Kina Securities customer fraud incident. I did miss this announcement because it was released at 10:41 a.m. And in fact, I haven't looked at any announcements after 10 a.m. So this is absolutely new to me. Okay, recent instance of fraud impacting several accounts belonging to a small number of customers. There you go. And share price is down. However, the chart was looking interesting, and I would think this is a very short-term impact. This is nothing wrong with the company itself, and the market will forget about this particular announcement fairly quickly. So this could be an opportunity to buy some shares. In fact, we have a little bit of selling today, but this could be a buy the dip situation for Kina Securities just based off this chart. Yeah, the chart is looking really nice and sort of a buy the dip. The last time we saw the buy the dip situation was when they went ex dividend back in on the 5th of March 2024. Okay, so let's go to the top announcements of the day. A few honorable mentions, starting with Beach Energy, down 2.24%. A strategic review outcomes presentation. I'm not sure if the share price is down because of the strategic review presentation or because of weakness in the energy market. So let's have a look at the chart for Beach Petroleum. Do I have any interest in this company right now? And the answer to that is no, absolutely no. Daily chart looks boring, and the weekly chart looks boring as well. So no interest in a Beach Energy. I don't care if you're bullish on oil or energy. The chart looks horrendous. That's how I'm playing these sort of companies. These low quality companies. I would consider Beach Energy a low quality company. If the chart and the trend or whatever you're looking, sentiment looks negative, yeah, no interest at all. Clinivel, a company I do own, more of a longer term holding. They're up 2.9%. That's okay. And a felmatide in fair skin Parkinson's patients. This was interesting. I actually did read this announcement. And I didn't want to include in my top 5 announcements of the day because I'm a little bit biased. So announced a novel clinical program evaluating ephemertide as a treatment in early stage Parkinson's disease. I was like, what the hell is this? In fair-skinned patients. So there is a bit of jargon in here, but for instance, the program objectives are to determine whether ephemertide through melanocortin-1 receptor activation is able to lower a toxin in blood levels in Parkinson's disease patients. So interesting announcements that maybe fair-skinned people with Parkinson's disease could be treated with a felmatide. Well, that's interesting. And the chart for Clinivel, CUB. Chart for Clinivel, yeah, this is the weekly chart. Share price in a downtrend, still in downtrend with the daily chart. There's a nice support level at about $13. And it's pretty obvious why that's a support level. Go back. The low for this company in the last 4 years is $13. 1, 2, 3 times. If it breaks $13, that would be fairly bearish. But I do think this company is really cheap now. P/E ratio is only 25 for a company that is growing at a nice rate too. Maybe I'm a little bit biased, but Clinivel. And the other honorable mention is a company that's not trading, City Chic. Doing capital raising, trading hot for capital raising. I noticed the last few days there was a little bit of buying in this company, a little bit of a rally. You can't really see that weekly chart, of course. Look at that. That's a horrible weekly chart. So a little bit of buying. Maybe it was just yesterday. Up, yeah, the candlestick. In fact, the last 6 trading days, there's been a little bit of buying coming in. It could be just because the share price is at a support level, very close to support level, because the last lows were almost at this level. And unfortunately, they're doing a cap raising. The share price is almost at a long-term low, which is not when you want to do a cap raising. They should have done cap raising back in February. The share price was double what it is right now. So not the best timing when it comes to cap raising for City Chic. Okay, so let's get to the top 5 announcements of the day. And number 5 is MMA Offshore, a company that's also is in a trading halt. Released a positive trading update 5 days ago. They've gone into a trading halt. There is a takeover bid for this company, and the management have released 2 positive trading updates since then, and they've completely undervalued the takeover bid offer. So they're under. So the takeover bid was ridiculous price. It way undervalues the company, in my opinion. And I know a lot of shareholders are very angry with management. So this is a trading halt in relation to the scheme of arrangement between the company and Cyan MMA Holdings. I have a feeling this is going to be positive. I have a feeling more than likely, I'd say maybe a 55% chance that the takeover bid price has been lifted, has been raised, because otherwise I'd have even more discussed with management because of these two positive trading updates the company has released. So we'll know about this on the 20th of June, if not earlier. If it's anything other than that, I would be disappointed for shareholders. And I'm saying disappointed for shareholders because I am no longer a shareholder of this company. I was so disgusted with management of this company, I just sold my shares. And that comes back to this question from Pee-wee. Hi, Kneppy. Are you going to vote in the AMA meeting in favour of the scheme of arrangement to sell to Cyan? And I just actually did reply to that. No longer a holder of the company, sold because I'm paid off with management after another profit upgrade. And maybe I made a mistake. Yes, maybe I made a mistake and should have held my shares, because if there is a raise in the takeover offer, then the share price will rally. Now, if the takeover bid is withdrawn, I think the share price is going to rally because of the profit upgrades, which would be very rare when a takeover bid is withdrawn, the share price rallying. Usually the share price drops a lot. Anyway, so thank you, Pee-wee4326, for that question. And I missed answering that question in my last answer reply video. For some reason, I don't know why, I just completely missed it. Anyway, so that's coming in number 5. We have MMA Offshore in a trading halt right now. Coming in number 4, we have Tinybeans. I believe this company up 19.4% on a strategic partnership with Babylist. I believe I've done very little research on this company. I believe this company has some sort of platform, whatever, that you can share baby photos with family, which sounds weird because apparently you don't want to share your baby photos on Facebook. I have no idea. Anyway, I believe that's what they do. I could be a little bit wrong. Let's have a look at the About section. Tinybeans is a leading global consumer subscription platform serving millions of millennial and Gen Z parents and their families monthly. As its core, Tinybeans is a private photo sharing app and media platform that connects families and turns moments into memories. In other ways, able to share your baby photos, your newborn photos, with your loved ones. And it looks like they're listed on a few exchanges, the OTCQB. Anyway, secures major US strategic partnership with leading digital parenting platform Babylist. I have no idea how big Babylist is. Each year, Babylist helps over 9 million people make purchases through its baby registry app, e-commerce shop, and comprehensive product guide. So no financial numbers in this, I believe. So there's a lot of hope in this deal that Tinybeans will benefit, and there is a chance they will benefit. And I'm also wondering how Babylist is going to benefit. So if you do like this company, like this announcement, the main thing I would probably want to know is how Babylist will benefit. Will they get some money from Tinybeans? Because it says down below, Babylist will promote and integrate Tinybeans into its expecting and new parents across its large and engaged email database and registry fleet. So Babylist would have to benefit from this. So I'm not sure how much Tinybeans will benefit. And for that reason alone, I'm not usually that enthused by these types of announcements. And that's one of the reasons why Tinybeans comes in number 4. However, the market likes it. So let's have a look at the chart for Tinybeans. And the chart looks pretty negative. This is an ugly looking chart for Tinybeans. In fact, the share price has been a downtrend since, I would say the share price moved into a downtrend in April 2021 when the share price was $1.40. Share price is now 7.4 cents. Even if the share price has rallied 20%, and the market cap of this company is about $10 million. So an ugly looking chart. But notice one thing, some really good volume has come in the last 3 months. Compare that volume to the rest of the period. So maybe that's a good sign that the bottom has been reached. Maybe, I don't know. The other thing I probably should do is have a look at the most recent financial information. Do they release Appendix 4Cs? I can't remember. They do. Can't remember. Some of these really small companies actually don't, and they're not operating cash flow positive. Only $1.3 million in receipts, 5 million for the first 9 months, and still burning through cash. That's probably a reason why I didn't even know they did a Appendix 4C, because I would have looked at that and moved on to the next company. So that's Tinybeans. I have no interest in Tinybeans at this point in time. Coming in number 4. Coming in number 3, we have a company I know nothing about, Cardiex, up 15.5%. Cardiex sales and operations update. This is the sort of announcement I'm a little bit more interested in, because it's got more substance than the Tinybeans announcement. So in this particular announcement from Cardiex, I'll look at what they do. I still have no idea what they do. Cardiex sales update. So this is a real company. New product update. So maybe the revenue the company is producing will increase soon because of new products. New product sales and pre-launch activity. Pulse waitlist campaign. First global physician partnership sign. So we sort of know what they do. It's sort of in the name as well. It's something to do with health. Connect Pulse telehealth partnership. Cardiac arterial research initiative results. Status of new FDA clearance submissions. So what does this company do? They develop technologies to enable humans to lead better, more productive, and longer lives. That simply does not tell me what they do at all. I have no idea what they do. You need something better than that, Cardiex. The company's suite of products includes medical and home health devices and digital solutions for hypertension, cardiovascular disease, and other vascular health disorders. All based on the company's market-leading core vascular biomarker technology, Core. Okay, there you go. So they are what I thought they might have been. So the first thing I just want to do is have a look at the most recent financial results, just to see, do Appendix 4C, what the sort of cash flow or receipts, revenue, cash flow is for this company. And then we'll have a look at this particular announcement on maybe not so much closer or in depth, but anyway, so receipts low, although there's a big difference between year-to-date and current activity. 9.2 million in year-to-date, so they must have had a one-off in terms of receipts or revenue, because $9.2 million year-to-date and only $690,000 in the current quarter. And even though they got that $9.2 million receipts in the year-to-date, they're still burning through a fair bit of cash. In fact, in this quarter, they burned through $6.1 million in cash. They are burning through a lot of cash. And this is another reason why I have no idea what this company does, because there's no reason to learn what they do, because they're burning through cash, and looks like they've done capital raisings to increase the cash on hand. And even though they've done a capital raising, cash on hand actually fell. They did a $7.1 million capital raising, cash on hand still fell. They're going to have to do another capital raising soon. Let's have a look at section 8. And they have 1.65 quarters of funding left, which means they have to answer section 8.6. And what they say here, no. This is the question, does the entity expect they will continue to have the current level of net operating cash flows for the time being? If not, why not? No. In December 2023, the group received $6.3 million in settlement of contractual payments for the ClinChain clinical trial. A significant portion of these funds were used in the March quarter to settle trade creditors. Okay. So that's why they had a lot of money. They received $6.3 million in the settlement of contractual payments. Okay. Okay, so that sort of makes sense, sort of. Okay, so they're on track for record revenues. Currently, they're on track to exceed 12 million for financial year 24 compared to 6 million financial year 23. Is that minus that 6 million they received for control? I'm not sure if that's sort of a one-off. Again, that's a problem when you don't know a company too well. You sometimes do have questions, a lot of questions. Sales to the research market in May were the highest for the previous 6 months. So they are increasing. That's the main thing. That's what I read here. They are increasing. They have a new product, Connect Pulse, scheduled to arrive in the first week. This new product could be amazing. Could be a company making, or it could be a disappointment. I don't know just yet. Yeah, there we go. So no massive news there. That would get me absolutely excited because of the most recent Appendix 4C. Probably have to see some further proof from the company, but the market likes it. Now let's have a look at the chart. So I could have done all this work for nothing if the chart looks absolutely horrendous. Let's have a look. Yep, and the chart looks absolutely horrendous. There you go. Share price dropped 40% on 26th of February. Chart looks horrendous, doesn't it? No interest. Just like Tinybeans, we have seen a massive increase in volume this year compared to previous years. Could be a function of the share price much lower. Probably what you need to do is sort of a dollar view of volume, not a number of shares of volume, to take into account that the share price is significantly lower and more shares are traded because of that. So that's probably the thing you should recognize. But when the share price is in a downtrend, you should see low volume. When share price is in an uptrend, you should see increased volume. That's the nature of downtrends and uptrends. That's why share price is downtrending or uptrending, because when a share price is downtrending, there's not much interest in the company. When share price is an uptrend, there's increasing interest in the company. So you should see increasing volume or higher volume when share price is an uptrend, lower volume when share price is in a downtrend. Okay, so that's Cardiex coming in at number 3. Coming in at number 2, we have Quickstep. I know this company's chart is pretty bleak as well, up 8.6%. Major customer contract and volume update. They have released a few interesting or good announcements in the past week. So 2 in the past week: development engineering business update and major customer contract and volume update. This particular, I should open up the announcement first, shouldn't I? So first thing I'm going to do is just go to their Appendix 4C. This company is one I've been following for many, many years. And when I say many, many years, probably over 10 years. And this company continues to disappoint me. So they are a manufacturer of like aerospace stuff. Let's just go to the About section. Largest independent aerospace composite business in Australia with facilities in, I don't care where you have facilities. I don't care about how many people you employ. Largest independent aerospace composite business. There you go. Anyway, and in the most recent Appendix 4C, they were operating cash flow positive. So by 1.9 million. And they were free cash flow positive as well. So things seem like they might be moving in the right direction for this company. In fact, for the year, this company should have well over $100 million of sales and should be operating cash flow and free cash flow positive. So that's one of the reasons why this company is coming in number 2 instead of Tinybeans and Cardiex, because there is a little bit more substance in regards to this company. They have a little bit more going for it. Now, this particular announcement, it did cause me a little bit of interest, but then I saw the numbers and I was like, oh, okay. Actually, it wasn't this, it was another one. Vection Technologies, they released a contract, and the numbers for that announcement was like, meh. So I haven't even mentioned Vection Technologies. Anyway, so no numbers in this one. And the question is margins. I'd like to see the margins, that sort of thing. But the market has liked it. But the next thing you need to look at is the chart. Now, if this company can continue to being operating cash flow positive, free cash flow positive, becoming profitable, getting these contracts, increasing their revenue, this could be an interesting company in the future. But the chart in the downtrend. Increased interest in this company the last 5 trading days because of these 2 announcements. So the share price has rallied from about 15 cents to 19 cents. So not much of a rally, but the share price is still in a downtrend. And we haven't seen today, there has been a little bit of selling because the share price was higher not that long ago. So because the share price has been a downtrend, most of the shareholders are underwater. They're in the red. And as soon as share price rallies like it has over the last 5 trading days, we see increased selling, increase shares on the market. And unless we see increased buying, that selling will put pressure on the share price. And we've seen that with Quickstep over the last few trading days. So let's have a look at the weekly chart. It's been a downtrend forever. Again, I've been following this company for a long time, and it just disappoints. It's never been an opportunity where I thought this might be an investing opportunity. There's one time when their share price looked like it was rallying back in 2019, but didn't last very long. Now, the market cap of this company is really small, 12.2 million. So another reason this interests me is the market cap has been absolutely shot, has beaten down, 12.2 million, negative sentiment, and I think there could be some good valuation in this company if they continue performing like they have in the past year in terms of cash flow. I need to see that cash flow. But this would be probably a capital intensive business. These new contracts, they're building stuff, I assume. Let's have a look. Oh, no, we haven't got it here. Although the capital expenditure in the last, this Appendix 4C was not all that much. So I'm assuming they'll have to spend a fair bit of money to honour these contracts. What are they going to do? Oh, this is sort of a contract update. What seems like it is. And I'm not sure how much spending they have to do to fulfill this contract. It's probably my own thing I'd be wondering about this company. But definitely a company I have had on my watch list. It's in my manufacturing watch list, but it's not yet in any of my other watch lists because the share price or the trend or the chart looks absolutely horrendous right now. So coming in number 2, we have Quickstep. Coming in number 1, we have Race Oncology. And there is one reason why this company is number 1. Share price is up 15% today. So fairly similar rise to Tinybeans and Cardiex. A fairly similar announcement to the one they released 1 week ago. So on the 11th of June, US FDA Orphan Drug Designation awarded to IC220 bisantrene. Today, RDA RPD designation granted for IC220 bisantrene. I'm not sure the difference between the announcement today and the announcement 1 week ago, but the market likes it. And the chart does look way more interesting than any other company that I've talked about today, apart from MMA Offshore, but that's a different story. So let's have a look at the chart for Race Oncology. This is the weekly chart. Now, the daily chart does look way more interesting. And I was looking for a dip. And we had that dip the last 3 trading days, but I missed my boat. I was hoping the share price would get down to about $1.60, so I could make a little bid for some shares in this company. But then the company released this announcement today, and the share price at some point today did get to a 1-year high. So this will feature on my 3-month high watch list today, or screen today, not watch list. So much better looking chart for Race Oncology, a much bigger company, market cap at 304.8 million. Don't think this company has much revenue, if any revenue at all. I can't remember last time I looked. So let's have a look. You have to look at the 1 year. Actually, 3-month would have done. I can't remember if this company had any revenue or if it's pre-revenue. Let's have a look. Yeah, this company has no revenue at this point in time. Still burning through cash, although they do receive fairly big government grants and tax incentives, $4 million in the past quarter, but that's not enough to be sustainable or to keep the business going without the company doing capital raising. So that's probably the one thing against this company. They are pre-revenue, and pre-revenue companies have a lot more risk attached to those. Them. Those. These. Those. Them. All right, so I do have time for a few charts. I did mention Biome. So let's have a look at Biome. And yeah, the Biome chart's starting to look better. And Biome has reached probably an all-time high. I am going to assume it's an all-time high. Yep, all-time high today. Biome. The company released an announcement 4 trading days ago. And today we've seen reaction. So delayed reaction from that good announcement a few days ago, up 14.9%. So the Biome chart looks pretty good. Other companies in my technical portfolio are up. A few companies down, but that's okay. A few companies down. You're not going to see every single company up. But a lot of the companies that I am trading right now have had a good day, which is what you want to see when the overall market is up a fair bit. And in fact, time now is 4:48, so the market is closed. I should have mentioned what time it was. So everything's up. Everything's up big, so that's good. And that's what I'm going to have for today's video. I hope you've had a good day. And I hope your portfolio is up big too. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.